With that, I guess move to commodities now. We have Manisha joining in. Manisha, what a morning. Good morning to you.
Well, yes, it started really early for all of us, didn't it? And yes, we have seen a very strong knee-jerk reaction come in for many of these commodities as well. You know, just to remind you, well, of course, there is a risk-averse scenario that we are looking at in the international markets, but all of these commodities are global in nature. So country-specific tariffs does disrupt a lot of global trade there. So markets are looking at higher than expected U.S. tariffs. The best-case scenario that the street was anticipating was 5 to 10% and worse between 15 to 30%. And we seem to be looking on the higher side here. 10% of baseline tariff is what we've seen all countries, and then the major producer and consumer of commodities have had it on the higher side. When you look at the China markets, well, we're looking at around a higher number of 34% there. China already is dealing with 20% of tariffs, and that makes it 54% of tariffs. And remember, China is the major consumer and producer of many of those industrial commodities. So we are looking at reaction coming in for many of those. For India, we're looking at 27% at this point in time, and that reaction clearly has come in for the gold prices, which has now made 22 days of all-time highs in 2025. And we've seen 3165 break on the higher side, 3200 in the front month futures as well. So very strong gains continuing in the safe haven buying in sense of gold there. Crude oil prices, well, 80% of countries in the global markets import crude and 20% of them produce that. So we are looking at crude prices also taking an impact from this. 3% of a decline is what we are dealing with right now. There are concerns of weak energy consumption going forward in the new fiscal, and that's what's bothering the crude prices. The metals also have had a similar scenario come in. Natural gas prices fell 4%. You have COMEX copper, which hit an all-time highs in the month of March, also has declined quite sharply, 4%. There are actually reports from UBS and Goldman Sachs saying that if these tariffs continue, then we are looking at a collapse in sense of copper markets going forward there. Well, zinc, aluminium prices have seen a 5.5% of a decline on the weekly basis as well. But this is overnight markets, and the iron ore prices in China fell by 6%. It has been a 3% of a decline coming in for other industrial commodities like rubber and cotton as well. And that shows you on how we've seen prices go on on weekly sense as well. We have seen some exemptions coming in like steel and aluminum articles, but remember, there already is a 25% tariff that we have seen on these metals. Auto parts is what has been exempted as well. And more importantly, while the US has imposed 25% tariffs on all imports when it comes to steel and aluminum, so that is the reason they have been exempted at this point in time. The other commodities that you see exempted at this point in time is copper, semiconductors, and lumber articles as well. And then it has been about bullion. By definition, bullion means gold and silver both. So as of now, there is an exemption for both of these. All exempt articles also may subject to future 232 event as well, is what. So as Nilesh was telling us that this is, it is not finished yet, and we could be looking at more negotiations and retaliatory tariffs, and some of these numbers perhaps pulled back as well. I also want to show you on what we've done in sense of commodities on a week-on-week basis until now, and everything has seen a decline, barring gold. Well, that's the only one that's trading on a firmer note at around 3% on the higher side. Silver is down by 3%, and that's exactly what the case has been for many of those metal prices also. So whether it's copper, aluminum, and zinc, we're down 4 to 5.5% on the weaker side. So, well, yes, apart from safe haven buying in gold, everything else in the negative.
All right, Manisha, it's a very comprehensive look at what's happening across commodities right now.